All right, guys, welcome back. So I picked out the most pertinent articles of the day that I felt pertain to the market and general finances. First off, I'd like to say that more than 271 million shots of COVID vaccine have been provided. An average of more than 2 million doses a day were actually administered. That's a sustained record. How does this relate to the market, you might ask? Well, and that's going to be because as businesses reopen, consumer activity is going to increase. Next up, we have some less positive news. This is going to be the fact that stocks did, in fact, dip today. They extended losses from day previous. Essentially, this is because there's a lot of optimism over business reopenings, but that optimism is weighed against concerns about high PPE numbers and economic overheating. Another negative note today is that 10-year Treasury notes are actually closing in on a crucial 1.5% figure, which is going to detract from optimism around securities. Additionally, there was a disappointing report on private payroll growth in February, which again weighed on many risk assets. So the reason this was, by the way, is it suggests that the labor market was still struggling to make headway amid the ongoing pandemic. That said, hopefully we're going to get more positive reports in the next coming months and as the pandemic continues to wane. Next up, I have a story about Google. So it says Google plans to stop selling ads based on individuals browsing across multiple websites, a change that could hasten upheaval, in the digital advertising industry. Alphabet said that they would next year stop using or investing in tracking technologies that uniquely identify web users as they move from site to site across the internet. Obviously, that's not true. None of that's true. This is the age of information. So, most money that's derived nowadays actually is just from information itself as opposed to any material goods. Google accounted for 52% of last year's global digital ad spending of $292 billion. And obviously, that was targeted ad spending. If they didn't have the ability to track individuals across multiple websites, then they would not be successful in actually gaining those sales. Next up, I have Octa. That's the ticker. It goes by Get Report. It's an identity verification specialist. They're a company that's acquiring Auth0, which is a rival in the industry, another identity verification company, for $6.5 billion. But this move was not really received especially well. There was some weaker than expected outlook, and at last checked, Okta was actually down 11%. This might actually represent a buying opportunity, though, because, well, quote unquote, organizations everywhere are rapidly leveraging identity to streamline processes, reduce costs, maintain the highest levels of security, and improve customer experiences. So, even, let's go to something like Top Shot with NFTs, they're going to require the services of these sorts of companies and, blockchain, again, CRM. Salesforce is my sleeper blockchain ticker, but these two companies are obviously heavily invested in identity verification as well. Next up, I'd like to talk about Amazon and the NFL. So, the NFL is actually on the verge of signing new rights deals with media partners, Amazon being one of those partners. And essentially, what these new deals are going to see is TV networks pay as much as double their current rate, while Amazon is actually going to pick up mini games. So this deal with Amazon would result in a pretty significant number of Thursday night games ending up exclusively, and that's very important that it's exclusive, on its Prime Video platform. And the reason that's so important is those games wouldn't be playing on traditional television outside of the local markets of the two teams playing. So if you were a sports fan and you didn't live in that local market and you wanted to watch Thursday night's game, you would have to be an Amazon Prime subscriber to do so. I do know, that's fared very well for other streaming companies in the past to add sports, and people tend to follow. So next up, a 600% gain in carbon prices is vital to keeping global warming at bay. So this is according to energy consultant Wood Mackenzie. Um, Essentially here, to stop global warming from rising above 1.5 degrees Celsius from the pre-industrial levels, carbon prices must surge to $160 per ton by 2030. And that's going to be up from a global average of $22 at the end of last year. But higher CO2 prices could actually encourage companies to reduce their footprint through capturing carbon, and this is described as a potential trillion-dollar industry. I would like to say Exxon, they may have their reasons for saying this, but although once a skeptic, does see profit in capturing carbon emissions. Not sure if this is because of new policies implemented by Biden, or what they expect to be implemented in the future, and they think that this is a smart move to say this or do this, or if it actually is profitable. I suppose we'll see in the future. Next up, we have SpaceX and a little mishap they had. So their SN10 prototype did lift off from SpaceX's Seaside launch pad, but after landing somewhat successfully, it then exploded. They would describe this, or Elon Musk would describe this, and did describe this as a successful landing because it made progress upon previous attempts. Musk actually said, quote unquote, "I'm highly confident that we will have reached orbit many times with Starship before 2023, and that it will be safe for human transport by 2023. Musk is famously sort of brass with those sort of statements, and sometimes he can get a little bit ahead of himself. But it is, quote unquote, again, looking very, very promising in his words. Bitcoin is going to be the next topic of discussion. So Bitcoin actually topped $50,000 in its recovery, once again anyways. So the reason for this is with the return of stimulus fueling activities in the U.S. And elsewhere around the globe, it's very good for scarce assets such as Bitcoin because there's a limit to the total number of Bitcoin out there. And Bloomberg reported late Tuesday that billionaire hedge fund manager and then also a former U.S. Commodity Futures Trading Commission chairman have both invested in both crypto assets and then blockchain investment firms, specifically one firm which would be Block Tower Capital. We have a quote here from a senior market analyst for OANDA that Bitcoin is, for now, steadily getting constant endorsements, and you're still in the early stages of this institutional interest. So essentially, we're probably going to continue to see companies much like PayPal or Twitter or SpaceX come out and say, hey, we're interested in investing in Bitcoin. There are actually some very interesting reasons that companies are investing in Bitcoin. It's kind of complicated, so I won't get into it, but the way that intangible assets are taxed makes it an interesting play on their part. And then finally, oil traders count down to the critical OPEC meet. So oil trades at around $61 a barrel as investors wait for the critical OPEC meeting that starts later Thursday. But right now, there's no clear sign of really where the market is headed, where the supply is going to come from, or going to go. That said, Citigroup Inc. has advised its clients not to make any bets on the meeting as there are quote-unquote too many wild cards. In the past, Saudi Arabia has liked to sort of surprisingly pull out some bullish plays, and that's something that's mentioned previously in this article. So there's really no expecting what's going to happen at this meeting. It's just, seeing afterwards what did happen and then going based off that. So that said, there is a lot of speculation. Just don't buy into it until afterwards and just see what happened for yourself. But that being said, those are the most important pieces of news from today, at least in my opinion. Hopefully you learned something. Other than that, though, do have a great rest of your day and do expect a video tomorrow as well. Thank you.